Day 7 of our bootcamp, guys. Let's go. This is going to be about market structure and what a BOS is, break of structure. Let's get into it. So first of all, guys, let me quickly explain you the theory behind it, and then we're going to go into the practice and I'm going to explain you exactly how we're going to use it. But first of all, before I'm going to go right now into the detailed explanation, guys, what you have to understand about it is that there are multiple variations about this concept, right? Like break of structure, like I've heard there's so many names before, something like change of character. I think they call it Koch or something. That was super popular for about, I don't know, I think it was 3 years ago or something. So when I was in this SMC space where basically everyone took those 1 to 100 risk reward trades, and we're gonna go into it why I think that this is never gonna work, even though if you think 1 to 10 risk reward works, trust me, this bootcamp is gonna for you because it's gonna help you and will change your entire perspective to trading. Because what they all do is in reality is they just try to like lie to you and gonna like share with you a complete wrong perspective about trading. Now, I'm not saying you will never be able to catch a 1 to 10, like it's definitely possible, but to build a profitable trading edge behind that, I think for most traders out there, it's not gonna work. There might be a few traders who probably can trade like this, maybe, I don't know, but if you just think a little bit about your psychology, trying to hit 1 to 10s with a win rate probably below 20%, then good luck, to be honest. So guys, let's get into it. So it's an important point that you understand that so many people will tell you certain things about certain concepts, and break of structure or market structure in general is a topic, right? So many traders always like try to explain you that in the very first beginning when I was in the SMC space, market structure is king, is all you need. But what you will then understand is that not every break of structure is going to help you. Most of them will irritate you. But this is what I'm going to cover up in this bootcamp as well. But for now, let's just stick to the market structure, break of structure, and how we are using it. And this is the only way, from my point of view, who's going to like really work. If you want to use this strategy, guys, you got to use it this way. If you try to change certain things about it, then the outcome will be a different one, and therefore you will need to adapt certain things. So enough theory, enough talking. Let's just explain you right now how it works, and then let's just put it into practice straight ahead. So BOS, what is it? Well, basically, first of all, and that's exactly why we've done so many videos before we even come to this, is you got to understand the trend, right? Like you got to understand what trend you are in. And basically, when you have a higher high, higher low, like in this case, you are in an uptrend. And that means you will see and identify a break of structure to the upside, right? This is what we call break of structure. Now, I know there are many other names to it. People call it MSSS or CHOCH or COS, stuff like this. Forget about it. Let's just keep it very simple because that's what you need in reality in trading. Simplicity, but also very powerful tools. BOS, break of structure. By the way, guys, if you don't want to hang so long with me in this basic course, I got a free course down below for you where it's a little bit more advanced. But if you're a complete beginner or someone who is not so experienced yet, please watch this free bootcamp here on YouTube. It's going to help you so much, and try to watch this free course down below later on. Just check it out. So guys, higher high, high lows. This is the break in structure that you got to understand here, and that's exactly what it means. Price is closing above a recent high and it's printing a new higher high. And the way and how you want to see this right now on the candlestick chart is basically like this. If let me just draw a candle right here, right? So this is a high candle, and then maybe then the next candle is already dropping, right? When you got something like this, and then of course another bearish candle and so on. And now when the price now makes the pullback, right? This is the pullback now, and then it comes back up. What you want to see, just make a very realistic example before I show it to you on the chart. So we have something like this. Now when the price comes back up higher, what is important for you to see is that the price breaks through these highs, right? Through these highs with a full body, right? That's very important. This is then for us a true BOS, break of structure. Only if the full body of this candle breaks through those highs. If the price, instead of delivering you such a candle, will deliver you a candle where, let's say, it's very close to break it, but in reality only wicks above this line, then it's not a break in structure, right? Then we will actually just wait for the next candle, and the next candle will need then to like continue up higher, and only then if we break through it like this, then we have a full BOS. Otherwise, we just wicked above it, and basically we won't classify this as a true BOS. And with that in mind, that's exactly the concept. Very basic and simple. Now you would say, wow, that's it. That's BOS. That's the powerful one. You use this as your entry model. Yes, I use this for many, many things. But this concept alone, to be honest, is not going to be powerful enough, right? You need more than that. This is not no secret or something, right? I'm just showing right now here the way and how I map out things. And you will see everything is only that strong as all of the things that you will put them together. So you will see it's more relevant to understand all the confluences and a strict strategy behind that, how to use it. Because to wait every day for a candle like this, right? Price won't deliver it to you, not every day. And most traders will lack exactly this. They will enter on a trade when they see something like this. And then they see, oh, okay, but then eventually it's moving the right way whatsoever. But what if the next candle will be then something like this? We move up, higher, right? Very big. People would say, oh my God, it's the next big candle. But this is just a wick because the price closed back bearish. And then it's going to drop completely down. And it's completely manipulating you. And you thought about, oh my God, this is the trade whatsoever. And it's just because they didn't have patience, right? So this is why number one, what you got to need to understand about break of structure is you need a full body candle closing above. Let's just repeat this entire thing right now for the opposite direction. So for a bearish market. So a bearish market is basically when the price provides you lower lows, lower highs, and the BOS is exactly when we break through a previous low, right? And then we print a new lower low, right? And so on. And this is exactly how the price then follows. Structure, lower lows, lower highs, and so on. And that's exactly what we want to see. And a true break in structure is going to be only if we break through this again with a full body below. So if I show you now again an example like this, let's say this is the bearish move down, right? Here one candle, let's just make another candle, and let's just make even another one. All right, then we have the low price now is pulling back like this, and now price is finished with the pullback and it drops lower, provides a candle like this. Now this is going to be a bearish BOS, right? Because now we print a new candle and this candle closed through the low and perfectly. One more time, we don't want to see a candle, right, dropping like this, but then not closing through it. And if it's wicking like this, we want to see a break through this area now. Only then we will really have a real bearish BOS. All right, very important. That's how it needs to look like. That's exactly what you should follow. And that's the only way how to use break of structure. I would now use it another way around. Okay, great. How about right now, because we know we have not only two potential market phases, right? We don't only have downtrends and uptrends. We also have sideway markets, right? Sideway market is when price moves like this. All right, here's the same. If you want to like trade the breakout, right? If you have an expectation where price will go next, and you have like those levels at the top and down below. Again, here, what I will look for, if you really want to see it, say you have a bullish bias, right? Of course, one more time, this doesn't need to work, right? You need to understand all the confluences you have. Also here, you want a full body close outside of the range for an expectation that the price might go up higher, right? And as well, for the bearish side, you want a closing down below, all right? Very easy, simple. That's it. That's exactly how we break out of it. The thing is with BOS is that this is a tool, right? Most people will completely fail at, right? Because the thing is, the expectation for most is once you have this breaking structure, right? Their expectation is price is gonna drop, you know. But what can happen as well is that exactly this is not gonna happen. It's gonna happen exactly the opposite thing. So people will think it's gonna drop lower, but it won't. And for this, well, we'll need another concept. So bear with me, guys. Now I'm just gonna go through a few examples to show you right now in the live markets how a real BOS looks like and how you can actually identify it and how to use it. So for instance, very basic and simple. Let's just identify quickly this uptrend. So you see here higher highs, higher lows, and now we break through this high over here, as you can see, with a nice candle closing above this high. So this is, for instance, a valid BOS. All right, then price is pulling back, and then one more time you see here some highs, price prints through them, full body candle close above it. So again, the continuation and so on, right? What happens now here, right here, let's just zoom in to see it very detailed. Price is actually printing through this low, prints a new lower low, right? So this was a higher low, and now we break through it, and now it's bearish, all right? So this is exactly where most people will now figure out and say, oh my God, this is bearish, and so on. And this is exactly the thing with breaking structure, right? And we will cover this up, but basically, this is where most people will actually not understand how to use market structure the right way. And that's why market structure alone is actually not so powerful, but it's the roadmap of the market, and you will need to use market structure in terms of understanding where it needs to go. But for instance, you see it also here. The price here prints a higher high, right? But it's not a breaking structure, right? It's not a breaking structure. While to the downside, it gets broken. But as you can see, for instance, this low never gets broken, all right? So this is why I would not classify this even as a BOS in this case, right? For instance. But we will have other concepts to read through that. While this now is a better BOS, right? You see here, break of structure, and price continues to move up higher, and it's printing right now higher highs, higher lows, higher highs, higher lows, right? Very beautiful. Boom, 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 boom. All right. Now what happens here? Price again prints higher highs, higher lows, and then you see price attempting to go lower, but no, this is not a breaking structure, right? While some traders will view the wicks as a potential breaking structure, it's not, you know. This is actually not a breaking structure. So I would never like switch my mind over here when this happened, that the price will now go down lower. No, in fact, I would even stick to it and say, you know what? We had a higher high, and now I'm expecting a higher low, and we can continue with a new higher high. And that's exactly what it does, right? And here, as you can see, price goes higher, but never breaks through structure. And then what happens is it's still printing some higher lows, where price then breaks through it, and then it's exactly where the trend then changes from a bullish to a bearish one, as you can see, right? Breaking structure to the downside. Also here, we break through it, boom, break of structure, price goes down lower, and then lower lows, lower highs, and you see breaking structure, beautiful, right? That's exactly how you should view breaking structure at the end, guys. It's not that difficult, right? Boom. Until, again, we change around here. Breaking structure above, you see, it's a valid breaking structure. Boom. And now, as soon as we see that, price is again ready to go higher. You know, what happens here? Well, this is not a breaking structure, right? You see higher highs, higher lows, and this, no lower low, no nothing. This is just a higher low at the end, but not a valid breaking structure. Very, very beautiful, right? Also here, some would say, oh, breaking structure. No, it's not. You see here, yes. Here again, no. But then, right, it's pushing. And then it comes back, you know, and no breaking structure down below, no nothing. It just climbs higher and higher and higher. Okay, but now you will see also this model has weaknesses, because what happens here? Boom, breaking structure. Boom, right? And then people will say, okay, it's ready to go lower, but no, price is not ready to go lower. Price is ready to go higher, right? But then again, break structure, boom, bullish, whatsoever, and then not continuing higher. We just reverse now. We now go lower, and so on. That's the concept, you know. You cannot do more than that. This is basically everything, right? So at the end, the concept of break of structure is just to tell you at the end that, right, when we have a structure high and low, right, very simple is if we break above this, we might more than likely go higher. If we break through this, we go lower, right? So if this happens, okay, expectation is higher, then drops lower, then again can break through this or can break through this, and then what happens? Okay, we break through this, okay, then it's gonna drop lower. Now what can happen is can break through this and so on, you know. So basically it just shows you where it might go next, but at the end it's still kind of like not guaranteed, you know. We gotta understand that most people take break of structure as something guaranteed, and that's why they fail. And I know it's gonna be very hard then to read that every single time the right way, right? Because at the end you gotta interpret a lot, and you need to understand other confluences. You need to understand higher time frame, lower time frame, everything, and then things will be much easier, right? Then also here, for instance, to just cover up this is exactly a ranging market, as you can see, you know. So we got something below, something above, and once price breaks above it, like in this case, a full body above it, boom, that's when price continues higher, you know. Same with here, right? This is a very good example because also here you have this and this, right? And price like never breaks below, but then above we got this huge candle, and then that is exactly the signal to say, you know what, we go up higher, and as you can see, price really goes a lot higher afterwards. All right, and basically this concept is powerful on all time frames. You can use this also on the monthly time frame if you want, right? We can go here, check it out on the monthly, and then yeah, that's why I love gold so much, guys. It's so easy. The market structure is like very bullish. But yeah, that's the point of it, right? Like here, break and structure, break and structure, break and structure, boom, right? Then what happened here? Here you see never a break below, right? Just wicks below, and then later on, this is exactly that range. As soon as we break here, we didn't broke out, but then we broke out, and since this breakout here, as you can see, boom, it just pumps, you know. Also here, right? This is monthly time frame, guys. Right? You see, this is how you can like identify an entire monthly trend. So you have this break, expectation is bullish, right? Price then just comes lower for a pullback, right? Based on this move up higher, and then again higher, pullback, and then higher, 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 boom. Very basic, very simple. Also here, break of structure, break of structure. Here you have technically a break of structure. See, didn't work, right? Boom, break in structure, break in structure. So you see, even on the monthly time frames, it just repeats the same thing. That's why you cannot say market structure on the monthly time frame is better than on the lower time frame. It's not. It's the same. Even here, like this is technically a break in structure, and technically you could identify this if you don't use any other concepts. You gotta be bearish on it. Now, I would never be bearish on this. I would be the complete opposite on this. But for that, we gotta understand liquidity, right? And then you will be better at understanding also how to put market structure, and your win rate of just 50% will completely increase up to 75, even 80. Sometimes it can be up to 100% where you're correct about it, right? Also on the daily time frame, same thing, right? Can repeat the story over and over again. So here it's what's very important for you is, guys, to like get in the reps, right? And to like really mark them up. So here, high highs, high lows. So this is always a break in structure. The thing is just most people just try to use break in structure for a reversal, right? So for something like this, there's a reversal, price drops lower, right? Or maybe you try to identify it here already. Yes, you can do this. It's completely fine. But break in structure, from my point of view, exists on both sides, right? Like it's either gonna be a continuation or a reversal, right? And if you give it different names for that, do whatever you want. I don't care. I would not complicate it. I just say BOS, so I know it broke structure. You gotta be in reality very unbiased, right? Like you should have a bias, right? But technically, you should always be unbiased when you make your decisions if it's going to go up today or going down. Just take the information that the market delivers to you, form an idea out of it, and that's how you're going to follow. So if you say, okay, today is a bullish day, right? Then your expectation should be that a break in structure can happen, or that we trade towards it. So for instance, here at this day, you could have said, okay, it's gonna go up, right? And then you say, okay, if it's bullish, it's gonna like break through it. Now it broke through it, so your expectation is that it's gonna pump up. You see high, 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 low, high, 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 low, high, high, and so on, you know? Very easy and simple. Until a moment, then you see here what happens. Price breaks structure to the downside. Now, this is not a valid break yet, right? Here is the valid break, right? Breaking lower, what happens? Price quickly breaks back up. This is exactly the point when market structure can fool you, right? This is because it's in a range here, right? This is why gold is not so easy currently to trade, because it's the entire time in a range, right? As soon as we break out of this range, trading will be so easy in gold. It's going to be like so fun every single time. But since it's in the range, it's a little bit more complex to trade, because basically it's fooling people, because market structure doesn't work the way it does. You see here, again, we broke down. So people say, oh, it's bearish. We break up, oh, we're bullish, right? And it's true for a while. You see, it's true. Here also no breakdown, right? But here break up, and then you are bullish, but then break down. You're bearish, but then here we didn't broke, now we broke up, now we broke down, boom, break up. You see, it's playing around with you a lot, you know, and this is exactly in this accumulation range. It's very tricky to apply, for instance, market structure, right? So this is why you should not do this too crazy during a phase like this, for instance, right? But what's on the daily time frame is not, for instance, on the 1 hour. So on the 1 hour, you will identify, for instance, multiple trends, right? So you have in reality a lot of trends that you can follow, and therefore it's important to apply again market structure so that you know where you are, right? Like here, high highs, high lows, high highs, high lows, high highs, high lows, high highs, and then you see multiply break structure and so on, right? Sometimes works, sometimes doesn't work, and so on. That's the power of this concept. You just gotta understand how to put it together later on. But for now, that's the concept. That's what you gotta learn. Hope you like this video, guys. See you with the next day of the bootcamp.